So the ECB cut their main policy rate by 25 basis points at their December meeting, bringing the policy rate down to 3.0%. They also kept their plans to shrink their balance sheet intact. And at the press conference, President Lagarde reiterated the ECB's confidence in the disinflation process. This is really a triumph if we consider that inflation was over 10% a little over 2 years ago. So where next for the central bank from here? And in particular, growth in the region remains exceptionally challenged, and it's expected to remain weak in the years ahead. So what does this mean for the ECB? Well, at the press conference, President Lagarde was very clear that structurally weaker growth is not the job of the central bank to fix. In her words, the central bank cannot be a jack of all trades. And to us, this is quite a hawkish message coming from the ECB, because it means it sees no need for it to aggressively cut rates in order to support growth in the region. That in turn could mean that the ECB, in fact, is closer to the end than the beginning of its easing cycle. That said, we continue to see 100 basis points of cuts in 2025, taking the ECB's policy rate down to 2.0%. But the risk is that in the end, we will see fewer than 100 basis point cuts in 2025.